What if I told you by looking at the volume profile shape, it can give us a very good idea of what to expect on the following trading day? Now, today's video, we're going to be talking about one specific volume profile shape. And within this volume profile series, we're going to actually go through each day type one by one. I want to break this down so we don't make this video so long, and I want to get straight to the point. But before we get started, I want to let you guys know right now, Tradeify has changed their rules. No more 10-day payout. You can get paid out in as quick as 7 days. And right now, 35% off all their accounts. To take advantage of this offer, use the link in the description box down below. Use promo code Mike at checkout. Now, the first volume profile shape we're going to be dealing with in today's video is going to be what's called the D-shaped profile. And you can see right here in the middle of the screen, if we look at this, it looks like a capital D. Now, what this profile shape actually represents for us is the fact that we are having a consolidation type of day. And think about how the market moves. It moves from contraction to expansion and then back to contraction. Now, when the market is contracting, aka a D as in dog shaped profile, then what do we expect on the following day? We can expect the market to have some type of range expansion. Look right down here in this example. On the D-shaped profile for the NASDAQ, we had a 235 point range. Look at the following day. We had a 320 point range, but more importantly, look at the move that occurred after that. Now, there are a couple different day scenarios that actually play out from the D-shaped profile. Now, you're probably asking yourself, Mike, do we wait until the day is completely finished before we start trading off the D-shaped profile? And then the answer is going to be, it depends. If you see the D-shaped profile starting to form throughout the day, well, guess what? That will let you know you want to fade the edges. As we come down towards the lower edge, you want to look for bounces on the way back up. When we come up towards the upper edge, you want to fade it for a move right back down. However, in this example right here, we're going to look at a profile that has already been formed. And this is going to be very simple. If we take out value area low, expect the market to then go down and test the low of the prior day. And if we get down below that, expect the range expansion to continue in that direction. However, there is a caveat to this, and we talk about this all the time on the live streams. Now, if you guys don't want to miss the next time I go live, make sure you're subscribed. You have the bell notifications turned on for all. But one of the scenarios that play out with the D-shaped profile is sometimes it'll get a false break one way, aka set a trap, only to get a large move back in the opposite direction. And you're probably wondering, Mike, does the D-shaped profile only work on the NASDAQ? No, it works on every instrument out there. Gold, crude oil, NASDAQ, S&P 500. So now let's come over and look at the S&P 500. Here's a D-shaped profile. Now this one looks a little bit different than the other one. So I want to show you guys a few differences. But with this D-shaped profile, we can see we have a tail on the top and we have a tail on the bottom. The point of control, which is the area that has the most amount of volume traded at it, is right there, basically in the middle of the range. Look what happens, right? We first go ahead and we break value area low, we come right back up. But then once we break value area low, again, notice we go all the way back down towards the low of the candle. And then look at the ranges. We had a 66 point range on the day of the D-shaped profile. The day after that, we had range expansion to 110 points. So let's think about this from a trader's perspective. What type of strategies do we want to employ on a day when the prior day was a D-shaped profile? If you like to trade for trends or potentially runner type of trades, then guess what? If you knew the prior day was already a D-shaped profile, then it makes sense to look for larger moves on the way back down. Look at this last dump that we had right here. For example, the market dropped from right here straight down 109 points in the S&P 500. That is quite a large move out there. Now let's pay attention to this D-shaped profile right here. It's kind of a little funky looking D-shaped profile, but I would still classify this as a D as in dog shaped profile for two reasons. You can see a majority of the volume is all built in the same area. Now the D-shaped profile is a little bit lopsided, but here's a second criteria that we can look at to kind of qualify the D-shaped profile. Remember, a D-shaped profile represents contraction in the market. Look at the prior day's range, 360 points. Look at the current day's range, 162 points. So yes, we knew that range contracted. Now, as a bonus tip, before we look at what happened the following day, a lot of times a D-shaped profile will occur after you've already had a large day or a one directional day in the market. And in this case, look what we had. The market ran right on up. The following day, we formed a D-shaped profile. So if you already knew when a D-shaped profile should form, well, guess what? As this was forming, we knew that we should be buying the lows and selling the highs of that profile. But let's look at the following day. this is going to be one of those trap scenarios that we talked about. You can see right here, here's value area high. We break up, oh, we come back down. But then we get that big burst up, aka they set the trap only to get the move on the way back down. Did we get range expansion the next day? We got a range of 431 points, where the prior day with the D-shaped profile was only 162 points. Now, not only will this help us identify what type of strategies we might want to employ on the following day after the D-shaped profile, but if we know we're likely going to get range expansion in the market, that can also give us a heads up in terms of position sizing. For instance, if on a tight range day, you're normally trading 2 contracts, then if you know you're going to have range expansion, normally with range expansion, the stops are going to have to be a little bit larger, but the targets are also going to be larger. So in this example, if you expect a range expansion in the following day, it might be in a trader's best interest to actually reduce their position size in anticipation of that range expansion on the following day. Now, let's come over here to TradingView real quick and use the playback feature. And we're going to look at this D-shaped profile real quick. I want to show you guys a couple characteristics as the profile is actually being formed. For this, I'm going to come right over here to where it says replay, and I'm going to go ahead and start the day right here at the end of this day. So now we have no idea this is going to be a D-shaped profile, but let's talk about some things real quick. Look at this day, big move, but the following day did not have a D-shaped profile. Why is that? Well, here's one of the very good clues we can quickly pay close attention to. Look at the prior day's value area high, and I'm simply going to draw a horizontal line right across that area. Now, notice as we're coming into the New York session, before we already open, notice we are already well above, and then we continue to rally on up for that point on. So the fact that we are staying way above value area high from the prior day, that is a good indication that we're going to continue to move up higher on the following day. Not quite ready for that D as in dog shape profile. So now let's go ahead and drag that white line right up to value area high on the current day. Now in bar replay, I'm going to speed this up just a little bit. So again, so I can be respectful of everybody's time out here. So for this, I'm going to simply click play. And I want you guys to pay very close attention. Notice where value area high is, that white line that we have on top of the chart. Now we're almost through London and we're coming up on the New York session pre-market. Now right here, we're almost at 9 o'clock, right? So now we're at 9 o'clock and look what has already started to transpire. Notice how many times we've already hit value area high, pull back a little bit, value area high, yank back a little bit, and look at the shape of the profile. Now you can already start to see that D as in dog shape profile forming, and it's not even the stock market open just yet. Now I'm going to go ahead and speed this up a little bit more. Once again, let this play out and notice, what do? All right. When this candle came back down, if we're already expecting a D as in dog shape profile, what do? We basically wicked this down candle right here, and then the market came right back up. As we're up at the upper edge of these ranges too, guess what? We can short it, and you could have been able to capture that move on the way down. And just to put this in perspective, not even assuming you got the wick high over here, let's just assume that you entered the short somewhere around these swing points here as the market broke above and started to come right back down. From that example down to the low of this candle right here, that was good for roughly 110 points in the NASDAQ. I don't know about you, but that'd be quite a good trade. Now, I want you guys to also pay very close attention. Something we talk about all the time on the live stream is minus development areas in the profile. Now, if you've been on the live stream, you already know what I'm going to say, but look over here to the left, all right, where these wicks basically took place, where we had this down move here and this wick right here. We would have already been focused on this minus development area on the live stream. And look, that's exactly where the bottom of the D-shaped profile is actually forming. So not only do we know we have a D-shaped profile forming, but we also have a logical area where the market's going to try to make it down to and bounce. The first time we come into it, we expect the market to bounce or consolidate. This case, we reject it right back out. Now, the more times we come into it, the more likely that level will then give way. Now, if we speed this up a little bit more, we're just going to let this play out. You can see this time we overtake this high here just a little bit, but then look, as we come back above it, as soon as we start coming back below this high, guess what? We can then look to short again. Where can we look for? Well, it depends on how aggressive you want to be. We can either go to retarget these lows right here, which is also very close to the prior day's point of control. Let me go ahead and zoom this up here just a bit, put this in perspective. As we broke above this high, I'm going to drag this white line up here just so you guys can follow along. We broke above it. As we started to come back down, we can look to short, and then we can look to target that point of control And again, that's good for roughly 35 S&P points, which is not a bad trade to go ahead and finish off the day. Now the day is already closed, and look what we have. We have that D as in dog shape profile. So now, not only did we know to expect that profile throughout the day, and we could have traded it, but we also know what type of day is likely going to unfold on the following day. Now, if you like videos on volume profile, this is only going to be video 1 of this series. Come right over here to where it says playlist, and then you can scroll right on down to where it says volume profile. I already have 17 videos in a playlist at the time of recording this video. Or you can just simply click on the link right here, which will take you right to the playlist.